What's up, traders? So today we're going to talk about Sofi as they have earnings coming up this week. And so we will look at what you can expect from their earnings and also where they may be going from here. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I'm blessed to be able to bring in full-time income from the stock market. But before we begin, make sure to hit that like button. That just helps push this video out to more people. And do remember that this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. Now, as always, I have to start with a word from God that has to do with money, wealth, or business. And today's verse comes from 1 Timothy 6:17, and it says, "Command those who are rich in the present world not to be arrogant, nor to put their hope in wealth, which is so uncertain, but to put their hope in God, who richly provides us with everything for our enjoyment." All right, quite simply, if you're getting to the bag, do not let the bag get to your head, because all of that can be here today and gone tomorrow. But if you make sure to put your focus on Him, that He will provide you with everything you need, because if you've already gotten to the bag, He's the one who gave it to you in the first place. All right, but speaking of people who are absolutely getting to the bag, I have to shout out some members of the Trade to Freedom community. So we have Jeff here who says, "Close on Sofi and SOXL this week. I know it ain't much, but I've learned to never be mad at profit." And so amazing trades, Jeff. And then Chandra says, "Close multiple leap positions this week for a $16,000 gain. Thank you, Rashad, for guiding us through the turbulent week." And then they, of course, showed their receipts here. And I just commented down below. I said $16,000 week. I put the mind blown emojis. And Chandra said, "Rashad, learn to stay calm and follow the technicals rather than emotions. I am learning this art from you. Thank you." And then Andy says, please teach me how to edit screenshots, but here is my winner." And we could see that he made over $3,500 from one single AMD trade. So Andy, shout out to you. But if you guys know anybody who would like to join a cool community, tell them about the Trade to Freedom community. They'll get access to my actual trades as soon as I enter them. They'll get my entire options framework via the Trade to Freedom course. They'll be able to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goal. So the link is below in the description. Space is becoming very limited, and the price will be going up soon as we continue to run out of space. And so if you've been considering joining, then the easiest way to get started is to just get started. But with that, let's get down to business. Now, we can't talk about where Sofi is going without talking about some of the results that they're showing right here, right now. All right, so of course we will get some new information when they have their earnings release in a few days. However, let's discuss some of their current growth. So one, they have rapid member growth. They had over 34% year over year growth, which equated to 850,000 new members in Q2. All right. And not only are they getting new members, but they're also expanding their ecosystem. And so when you multiply those new members by all of these new products and all of these new products that you can cross sell to all of these new members, you start to get a huge compounding growth. And what I like about Sofi is they do not just sit on their laurels. The CEO is amazing, and he's continuing to roll out new product after new product after new product. So you really can't compare them to another bank. So you couldn't compare them to a JP Morgan, although obviously loans are a big part of their business, but they have expanded so much, you'd probably have to compare them more to a Robinhood. All right, but Sofi is really trying to become like the Walmart of the financial world. And so I absolutely love that for them. And then number two, we have fee-based revenue surge. Their fee revenue grew 72% year over year to 370 million, and they are scaling their loan platform model. All right, they're no longer just the company that is trying to refinance your student loans. I used to get those daggone pieces of mail like 3 times a week. Like, no, Sofi, I am not refinancing my student loans. All right, but they have grown from there, and they are now doing much more than just that. But number three is lending strength. So their student loan refinancing growth did grow 35%. Right, year over year, and now their home loans have grown 90% year over year. And so obviously that is a huge market that will continue to grow for them. And if they've been growing in that department with the high interest rates, the demand is only going to increase even more once the Fed starts decreasing interest rates as we currently expect them to do. All right, so we can see even more growth in that department for Sofi. Now, number four, macro tailwinds. All right, I kind of spoke on this obviously a little early, but we are expecting those rate cuts, which will lower funding costs and create a rising loan demand. And so when this happens, we should see their earnings go up even more. And then number five, they have a proven execution. They have been having an amazing last year. They beat on earnings 4 straight quarters, and EPS was 8 cents per share, which was an increase of 50% year over year. And they are expected to beat earnings and revenue here in this upcoming quarter. But with all of that, let's go ahead and take a look at some more information. All right, so looking at this data, we can see over here that SoFi has beaten earnings over the last 4 quarters. But for this upcoming quarter, they are expected to do 9 cents per share, which would be an 80% growth year over year. All right, and to end the year, they are expected to do 32 cents per quarter, which would be 113% growth. And then next year, they're expected to do about 57 cents per share, which would be 78% growth. All right, so as of right now, analysts expect amazing growth from this company. And one thing I can say for sure is that investors are expecting major growth here in the short term as well. So let's go ahead and take a look at the options flow, which will show us where the folks with the big money have been placing their bets. Now, you can find this tool on Bar Chart, and I have a link below in the description where you can get a free 30 days. But this is a good way to see overall sentiment into a stock. So let's just look at the last week for SoFi and were the net trades positive or negative. So if I go all the way back to the 20th, which was Monday, we can see the net trade sentiment was positive $6.6 million on SoFi. All right, there was about $10 million in bullish trades done and about $3.4 million of bearish trades done, which created a net trade sentiment of 6.6 million. Okay, and so that was Monday. And then if we go ahead and take a look at Tuesday, well, this one had a positive net trade sentiment of 1.2 million. And then if we look at Wednesday, then this was actually a negative 2.7 million, but also the market had a big red day on that day as well. And then if we look at Thursday, we had positive 318,000. And then if we look at Friday, we had nearly another million as far as bullish trades. And so overall, people are very bullish. And if we look right here at the first trade that we see on Friday, we can see that it was for the $30 call strike for November 21st, which is very, very near term, with the premium being 1.8 million. But if we come over here and we take a look at the gamma exposure, then we can clearly see that there is more open interest at that $30 strike than there is for any other strike price. And if we look at that box over there to the right, it shows us that there are 113,000 call options open with just 6,000 put options open for that strike. But out of that 113,000, 49,000 of them came just on Friday. All right, so people are placing their bets and they believe that it's going to get at least to 30 or possibly more. And so they are putting themselves in position. Now, typically it would take a lot of positive catalysts to get over such a large positive gamma exposure, because what this can do is kind of act like a wall of resistance as the price gets closer. However, obviously SoFi has earnings coming up, so that could definitely be its positive catalyst that it needs. But one thing's for certain is people are definitely bullish on SoFi. And let's go ahead and take a look at the chart. Now, looking at SoFi's chart, really it's kind of consolidated between that $20 to $30 level over the last few months. So it looks like it went and stayed over 20 around July 9th. And it's been on a nice upward trend, but it obviously had some struggles getting over 30, as on September 22nd, it hit 30 and bounced right back down. And then it tried it again right here. It hit 30, then bounced right back down in a huge way. And then literally just yesterday, it went up to $29.87, but bounced back down again. All right, but those nice round numbers typically are always some form of support or resistance, at least for the short term, right? And then also when we look back at that gamma exposure, there was huge positive gamma exposure at that $30 mark. And so market makers will need to hedge their position as the stock price gets closer to 30, which means they're probably selling shares at that mark. However, if we get a positive catalyst during earnings, then we could blow past that mark, and then that could become the new level of support. Now, us in the Trader Freedom community, we have been trading SoFi very heavily for a very long time now. So we have trades that are still open on it, and we have trades that we just recently closed for huge profits. But if I were to go ahead and trade it today, then what would I do? Well, let's go ahead and take a look at the Moomoo platform. All right, so here we are at the options chain for SoFi. And the first thing I need to decide on is what option strategy I want to use. Now, let's assume that we are bullish on the stock with all of the data that we just looked at. Well, what I personally don't want to do is buy calls right before their earnings. And there's a few reasons for that. The first reason is just before earnings, there is huge implied volatility. And when there's huge implied volatility, the premiums are much higher. And so right off the bat, you're going to be paying more for the contracts with everything else equal than you would pay if earnings were not coming up soon. And so if the stock were to not move much right after earnings, well, you may be down on the position even if it goes up ever so slightly. All right. And then two, I like to have a better margin of error because obviously we do not know what will happen after earnings. Specifically, how do investors take what is being said during the earnings call? We could take with a good guess what we believe they will do as far as their numbers and their growth, but we do not know what they will say for their forward guidance, as that can typically make or break a stock because every investment is the present value of all future cash flow. All right. So when we're investing today, we're not investing based on what they did in the past. We are investing based off of what we believe they will do in the future. All right. And so for all of those reasons, I like to have a decent amount of margin of error when it comes to earnings. All right. And so what I'm going to do is I'm going to sell puts. And by selling puts, I'm just agreeing to buy the shares if the stock price were to drop below my strike price by the expiration date. Now, what we could do is we could go ahead and just come to the very next expiration date, which will be a few days after their earnings. If we look over here where it says EM, the EM is the expected move. And right now it says the expected move is plus or minus $3.33. So the expected move is the largest move that the options market currently has priced in for that stock by that specific date. And so if we take this $3.33 and we minus it from the current stock price of $29, then that'll put us around the $26 to $25.50 range. All right, and so we could easily just go ahead and sell puts here and get a decent amount of premium. But what if I was like, you know what? I know that I want this stock and I would be absolutely positively fine with buying the shares of the stock at this price. Well, if I wanted to collect even more premium, then I can go out a little further. Right? So instead of this date that is 6 days out from now, then maybe I'll go to about a month. Maybe I'll go to this date that's 27 days out from now. So if I click that, we can see for this date, the expected move is $4.86. And so if we go ahead and just subtract that from the current price, then maybe that puts us around the $25 mark. And then so I'll go down here. I'm like, maybe I'll do this $25.50 strike. Now, guys, remember that this is just an example. These are not my actual trades that I'm actually entering into. If you do want to know those, then you'll come and join the Trade Freedom community. But this is just an example. Please do not blindly follow me. All right, so $25.50 strike. And if we click on that, then we can see at the mid price, I'll collect $105 per contract. All right, and so that is basically a 4% return in 27 days. And so that is an amazing turn. That would be over a 50% return annualized. All right, so that is amazing. And then from there, you can select however many contracts you would like to do. Let's say for this example, I'm going to do 5 of them. And we can look at the P&L graph. And for this trade, we will collect $522 up front right here, right now. And we're just saying, hey, that we will be your insurance. If you want me to buy your stock, if the stock were to crash, then you'll pay me $522 right here, right now. And I will buy the shares from you if the stock price drops below our strike. And I will buy 100 shares of it per contract. However, if it stays above our strike, which is $25.50, then we just keep the money and we go about our day, just like your car insurance company keeps your money, no matter whether you get into a car accident or you don't. All right, guys, but those are my thoughts on SoFi. Let me know down in the comments below if you plan on trading SoFi prior to its earnings. And if you would like to join a cool community, you know where to find me. But other than that, I'll see you guys on the next one. Peace!